Intel stock is one of my biggest positions on eToro. It's sitting around almost 20% of value, as you can see here. And today I'm gonna be talking about why I have invested so heavily. Why do I have such a high conviction in this turnaround play? This is a turnaround play in my portfolio. I have other types of bets, but mostly what I do is buying low, and I'm gonna be selling high. I'm betting big on a company that everyone is pretty much hating right now, and if a lot of people are fearful in investing in this company. Actually, I think the retail ownership of this company is more than 30%, which is crazy. The institutional investors do not want this. It's a lot of uncertainty surrounding the stock, and they want easy and stable gains. But yeah, one of my favorite investors ever is Peter Lynch, and Peter Lynch he made a lot of money in turnaround plays. So the AI response here on Brave browser is giving us that Peter Lynch approach to turnaround plays, where identifying companies that have been severely impacted and are on the verge of bankruptcy. Now, Intel is not on the verge of, is very far from going bankrupt. As we can see here, let's take a look at the stock price. It has fallen a lot, but it's not like it's not down 90%. It's down around 2/3 since 2021, which is it's a lot. It's down a lot in price, and yeah, it's not like a bankruptcy turnaround play. But still, I have learned a lot from Peter Lynch and his investments in these type of companies, and basically it's the same type of bet where when everyone else has given up, which I mean on the stock price, as you can see here, it had a huge steep drop of 60%, and then but it did not seem like everyone has given up on Intel stock. It did have a rally of almost 100%, so that's huge. Yeah, 100% at some point. So in this period since 2021 up until the end of 2023, yeah, it was not super beaten down, and not everyone had given up. But here, with these super sharp drops, 30% in like 2 months, and then another 43% in a very short period of time. I think these type of moves are very useful to me. I like to use these indicators. I have used them in the past when the company has very sharp drops. I do like to invest in these type of moments. I think not as a trade, but as a long-term buy and hold in a company that will hopefully turn around. I am betting that it's gonna be turning around. So let me show you some other steep drops that let's see here, Facebook, Netflix, but obviously Facebook is Meta is a very high quality company. It dropped a lot, and it dropped some more, and then the last drop was 30%, and then it started going up from there. It's not an indicator or anything like that, but I generally, like I said, I buy low, and I love it when the company that I'm interested drops by a lot. Okay, when there's like this is kind of more similar to Intel drops. So it dropped around 30% in a short period of time, and then moved sideways for a while, and then dropped another 50%, which was very huge. So I mean, this was already here. It was extremely oversold. I mean, how much can it drop? So after these aggressive drawdowns, I am looking to make investments. I buy low, and then I sell, take profits along the way, like I learned from Howard Marks. And you let your winners ride, like Monish Pabrai says, but yeah, I do not let any position completely balloon out of proportion, so you take a lot of profits along the way, and yeah, I'm usually out of the company after a vertical move up. So here I would probably be out of the stock already. But yeah, my plans with Intel Core, with Intel Corporation, is to hold it for many years to come. I think this is a very long turnaround play. I think since it's sitting around $100 billion in market cap right now, I'm looking to sell out completely, at least when it's around $500 billion. I think it can easily 5x. This has many qualities to it that can help it become 500 billion. It has a great design team for the processors, for data center processors, laptops, so mobile, for personal computing, and also the GPU unit is gaining traction. And then it also has their Intel Foundry services, which if that segment pulls off and gains traction and starts becoming profitable, I mean that's going to be huge for this company. This $20 billion in income in the ages of glory for this company, it's going to be easily achieved again, and then some. 30, 40, 50 billion in net income, in my opinion. And then when the company is going to be growing, it's going to be on a different kind of path, and then it will be valued different. It's not going to be so. 5 years ago, EV to EBITDA, let's see what type of valuation the market allocated to this type of company. So it did allocate, rightfully so, a very low multiple of 6 to 8, so around 6, 7, 8. And I think that was the right type of move because it wasn't growing and it was losing a lot of market share to AMD, and it was doing a lot of bad stuff. I personally hated Intel stock around this period. I started to like Intel after Pat Gelsinger came as a CEO and started to make changes, but he did not make enough significant changes like the new CEO. And we're going to be taking a look at what he does. So Lip Bhutan, this guy is from Malaysia, is a United States citizen. He was the CEO of Cadence Design Systems from 2008. I think, yeah, let's see. So here we have Cadence Design Systems. He was interim CEO in 2008. Oh, where does it say? Yeah, so in 2009, he became permanent CEO, official CEO. So let's take a look at Cadence. First of all, last 5 years, it has vastly outperformed the S&P 500. 95% for the S&P, and we're looking at more than double. This is amazing outperformance. If you held the stock in your portfolio, it would have helped you a lot to outperform the S&P. But anyway, let's take a look since he took over. So when the GFC started, the global financial crisis, it dropped down a lot. It dropped 85% or so. And since 2009, it's up around 8,000%. Well, this guy was CEO of the company. So this is exponential growth. Okay, this is he did very well during this company. So he didn't just grow the company by a little. He did very, very well. Now, obviously, the whole sector grew a lot. But anyway, what I wanted to also say is that the Cadence Design Systems is a software company for the semiconductor industry. It helps engineers design products such as integrated circuits, system on chips, circuit boards, whatever. So being the CEO of this company, he has a lot of knowledge about the semiconductors, about the semiconductor industries and connections. Okay, so I like his type of values that he brings to the company. I liked Pat Gelsinger a lot too, but I think this CEO is much more appropriate for leading a turnaround in Intel, and then the way he's been moving is very, very fast. I mean, he's making radical changes. This news is from April 23rd this year, just a couple of months ago. He's laying off 20% of workforce. So this is a headline. Intel CEO Lip Bhutan flattens leadership structure, names new AI chief. Again, this is what I want to see. I hate the middle management of the Intel. I mean, this was a very bloated company, a very corrupt company actually, with a lot of corrupt people coming from the government. I'm not gonna get into that, but yeah, what this guy is doing is saying basically, yeah, you're gonna just report to me now. I want to roll up my sleeves and take with the engineering and product teams so I can learn what's needed to strengthen our solutions. Tan wrote, this is exactly what I want to see here. Okay, he's not just gonna sit back. He's gonna work. He got to work, and he's gonna be a leader. He's not gonna let anyone, other people lead the company. He's firing management and other leaders for the whatever products, and he's gonna be making decisions now, which what I want to see when I'm buying Intel stock. Intel's new CEO plots overhaul of manufacturing and AI operations. Let's take a look here. So this Intel was this news was very good for Intel stock. Rose more than 8%. Good. Tough decisions. Company will need to make tough decisions, such as probably fire more people. Let's see here. Industry experts diagnosed a big problem under Pat Gelsinger. Yeah, he was too nice. I agree. He was way too nice. He did not want to fire a bunch of middle management. Let's see here. Intel top strategy officer to depart this month. Great. Good riddance. Goodbye. See you later. But yeah, we're gonna take a look at this at the numbers. Let's take a look and see how the company did since it started to deteriorate. So a top of 79 billion in revenue dropped severely to 63 billion. So this is a huge drop. Okay, let's see here, 20% and then 14%. This is huge. And then even for semiconductor cyclical industries, I mean, Intel wasn't that cyclical. It had cyclicality to it, but not like the memory industry. But yeah, anyway, it looks like it's stabilizing around this price. Research and development. What am I looking at? Earnings from operations 19 billion. Okay. So share changes, they did a lot of buybacks instead of getting their manufacturing process together and being able to produce advanced chips and not fall behind. They were pouring money into buybacks, and I hated to see that because they were falling behind. In 2020, when I made my new PC, I already went for AMD processor because it was just much better. It had a lot more cores. It was more efficient. It was just more powerful, and yeah, it was the first time in more than 20 years that I chose an Intel processor for my computer. So, sorry, an AMD processor. So I hated the company. I was glad. I liked seeing Intel being punished in the stock price, and I liked the stock price crashing because it meant that some changes had to be done to the company. Pat Gelsinger came on board, and now we have a new and exciting CEO. Margins slashed in half. This is horrible to see. This is why institutional investors do not want to touch this right now. When it turns around, they will probably start elbowing to get into the stock. But I don't think it's gonna be like a blowout like Facebook was. It's definitely not gonna have this type of run out. Okay, like in less than a year. 200% upside. You will not see this. Facebook is a very high quality company, and the semiconductor industry is very tough. But I think I will outperform the S&P by buying Intel right now, and actually it's up 6%. Jesus Christ! I mean, it's up. I mean, I started working on this video before the stock market opened, and it's up 6%. I did not expect this, but anyway, um, let's take a look at the balance sheet. So they have 9 billion in cash and cash equivalents, which is good to see for a $100 billion market cap. Cash and short-term investments, 21 billion. Inventory, 12 billion. Total assets, it still was growing. Maybe this year is gonna be growing as well. We don't know. Trailing 12 months, 192 billion. I want to take a look at the liabilities and debt. So it goes up, I think, in line with total assets, which is okay. I mean, the shareholder equity is going to go up as well. So we have right now we have $106 billion of shareholder equity to a $100 billion in market cap. So that's great to see. But anyway, net cash minus 28 billion. It's not a lot, to be honest. So 2019 they had minus 15. Total debt, they had 26 billion in 2018 and 50 billion right now. In my opinion, this is nothing. It's just the fact that the company is burning a lot of money with their Intel Foundry Services. It is not profitable. Hopefully it becomes profitable next year, but yet it has been burning a lot of money. But they have not been drowning in debt. They don't have a debt problem. They have a capex problem. So stock-based compensation. I hate to see this. I hope this somehow what the fuck is this? $3.4 billion last year in a stock-based comp. Yeah. I don't think they can afford this. I don't like. I do not like to see this at all. I hope that this is slashed, and yeah, with all the executives leaving and middle management leaving, hopefully we can slash like $1 billion off of stock-based comp or more. I hate to see this. Yes, Intel needs a lot of talent, but I mean, let's take a look at AMD. How much are they paying? Stock-based comp went up a lot as well. 1 billion 2022, 1.4, 1.4, 1.4. Yeah, Intel does not need to pay this much. Yes, they have a lot more employees, but yeah, I don't know why they have to pay. 5 years ago, 1.8 billion, and today almost double. Last year, almost double. Makes no sense to me, since they have to issue more stock than they repurchase, and they are basically diluting us. When yeah, they shouldn't be putting even more pressure on the stock price than they already are. Hopefully, they can turn this around as well. This number, I hate to see this stock-based compensation very high. 3 billion in stock-based comp for a $100 billion company right now that is riddled with problems. Let's take a look and see. 263 a couple of years ago. It was valued very low, and yeah, like I said, rightfully so. It wasn't doing the right things. ROIC was not that bad before, over 10%. This is what I want to see. And return on capital employed hitting almost 20% on average. This is, if they get back to this, I mean, it's going to be great. I mean, it's possibly that they can go well beyond 500 billion in market cap. So yeah, take a look at what the new CEO does. Try to make a decision. Study what Peter Lynch has done with turnaround plays, how aggressive he was buying companies on the verge of bankruptcy, the logic he was using, what he was looking for when buying these extremely depressed stocks, and they can then compare it to Intel turnaround play, and you'll see that the turnaround story for Intel is not that extreme. It's, in my opinion, a very easy play I'm just looking to outperform, even in the short term, outperform the S&P 500. After these big drops, I mean, yes, I have around 20% allocated, but if the stock price goes to like 30 or above 30, I will be slashing my investment a lot and look for other plays. But yeah, that's for another video to talk about. So yeah, that was it.